Okay. So this is a percentage now. So we can select the stocks according to our screener. Like we want ROC greater than so like that we can select the screen and we can even edit and save it also. For example, we can run this query, we have run it, and we can edit columns. Industry also we can edit. For example, we need only in food and products. Like that only Mr. Food is there. But this is not a good stock. We have to find which one is scam, which one is not scam. So we can select industries like, for example, chemicals and petrochemicals. So like that, even we can check like free float, total number of shares. We need number of shares less than 1 crore. So it is coming. So we can accordingly, we can select it and save this. Like for example, Satish stocks 3, low float, like that. It is saved. Now we have to, we can delete the screen also. Okay. So this is a point. And we can scrutinize our screens like sales growth, profit growth, sales growth 3 years greater than 30%, like that. Now profit growth. We can even select multiple screeners. Like that we can select. So this is about screener. There are other websites where we can use like this ticket rape and even Trendline, Stockage. I mean, Trendline is come to twice. Okay, I will remove it. So these are all the sites we can use to screen the stock. So we will go to next. This is just an example to show how financial terms used in real life business. For example, we can take an example of restaurant. Revenue is like $3,000 or 300, 3 lakh rupees or $3 lakh, whatever it is. We are getting that business of 3 lakh rupees or $3 lakh. Cost of goods is like 90,000. Gross profit is like 210,000. In this cost of goods, like for example, in the restaurant, like direct cost of salary, materials, goods, electricity, everything is cost of the goods sold. Gross profit is 210,000. Operating expenses. This is operating expenses is like every day to run this, we need to pay the salary because here it is coming like $120,000. Depreciation, $5,000. Like we are having some equipment that is wearing and tearing, laptop, utensils, and everything. So earning before income tax is operating profit, $85,000 out of $300,000. So gross profit is like 210,000. That excluded cost of goods sold, like cost of the materials, ingredients, like all this raw materials. And gross profit is this, and depreciation is this, and 85,000 is the tax. What we have to see is critically net profit. Out of $300,000, the net profit is only $60,000. And based on this report, if we see book value, like our assets, official net worth of the shop, assets this much, utensil, equipments, air conditioners, everything put together, even kitchenware, everything is like for example, $100,000 or 100,000 rupees. And we have to reduce liabilities, like we bought from bank. So that is to be 20,000. We have to remove it. So it's like book value is $80,000. So capital employed, for example, book value plus long-term debt. How much capital we put? 150,000. In that 100,000 is book, for example, 80,000 is book value, and balance is long-term debt. Like 150 minus 80 book value, that is almost 70,000 is a long-term debt. So that is a capital employed. So if we see ROE, net profit, 60,000 we have received, we have shown in the previous slide. Net profit is like $60,000. So total divided by shareholders' equity multiplied by 100. This is what ROE. So that means the return on the owner's personal investment. For every $1 the owner put in, they made $0.75 in net profit. For example, net profit is 60,000 and total shareholders equity is for some X amount. So it should be like 20% above always. So every $1 if the owner is putting, at least he should get, or he is getting 0.75 means 70% is the ROE. If he is getting $0.2 out of $1, that is 20% ROE. If he is getting $0.3 out of $1, even converted into 1 rupee also. So he is getting 0.3 out of 1. That is 30% of ROE. So ROC is same, EBIT, earning before income tax, is divided by capital employed. So 60% means this is a formula to calculate what is the earning before income tax. So this is 85,000 divided by capital employed, like 150,000 multiplied by percentage. So there are all the formulas as and when we have to use, and then we can calculate. If we are not having any patience, we can directly go to screeners and check it. So poll 2, which ratio do you check first? P, ROE, D, I only see price. Anybody comment, please?
P.
Okay. P. ROE. P. A and B. See, ROE is the most critical method. Most important thing to check first. If I have to rank B, A, C is a sequence. Because some companies are highly, debt oriented, like Motherson Sumi, take example, any industry. It's not that debt should be always zero or It should be less than 1. Debt to equity should be always less than 1. We have seen debt to total debt divided by shareholders' equity. If the total debt is 100 crores and shareholder equity is 100 crore, so it is 1. So debt to equity is to be less than 1 always. Like for example, 100 crore total debt and shareholders equity is 200 crore. So it is to be multiplied accordingly. It should be, if it is like less than 1, it is always good. More than 1, it is not good. Okay. Now we will see the technical analysis part. We need to see support, resistance, volume trends, moving averages, and RSI, MACD. They are all many things on technical analysis. We will not go in detail about each and everything. And but it is very important to understand what is the support level, resistance level, breakout level, or entry level or exit level. So this is very critical to understand on technical analysis part. We need to identify the buy zone during corrections in fundamentally strong stocks, not fundamentally weak stocks, because our idea is techno funda. So types of charts. So the line chart is there, bar chart is there, candlestick chart is there. These 3 types of charts are there. We are going to see more about candlestick chart. See, green is always growth, red is always, weak. It's like degrowth, you can say. Bullish means green, price rise means green, bearish means red, price drop is red, sell. If this candle is full, it is strong, it is 1 quarter, it is okay. See the weak stock and the strong, weak stock and strong stocks candle. When the stock is putting in a strong mode, the candles are very bigger. When the stock is on seller's mode, candle is very weak, and vice versa. Same way for sell also. Candles are in green is buy, and candles are candles of red in sell. When sellers are more, it will be reddish, and when buyers are more, it will be in greenish. So strong to weak, weak to strong. Okay. See, this is like bullish and bearish patterns. There are so many theories, so many techniques that our brother Sendil is expertized in that, and he only shared me some charts also. I will show them. See, this is all that basic patterns like hammer, bullish engulfing, bearish engulfing, evening star, morning star. It's all about pattern recognition of using charts. Like shooting star, how it is, see, inverted hammer, bearish 3-line strike, bullish 3-line strike, bullish engulfing, tweezer bottom. They are all just for understanding. It's not that we are going to use it immediately. I will show it in the chart and then we can understand it. The critical part of technical analysis is volume. Price up plus high volume. We have seen in the chart typically that I will show, and then before that, We will see HDFC Bank last 1 year or 6 months. See the volume here. Here, the volume is very high and low. We have to combine this. So this bars mentioned are volume indicators. So we have to check when the stock we are checking, we have to always check the volume. Like for example, maximum, if we see the volume in 2009, it is very high. And 2024, you see in some places, it is very high. Whereas in between 2022 to 2020, almost 23, yes, 1 year, there is no volume at all. Likewise, if you see in 2020 to 2022, volume is declining. You can see this. So this is about volume. Volume is the key metric on technical analysis. Price up, high volume. Many buyers are with strong conviction. Trend likely to continue. Example, stock price is rising from 100 to 110. Bullish confirmation. Price up but low volume, weak move. It may fall anytime. It may rise from 100 to 110. Again, it may fall 90. It's a cautious signal. Price down and high volume, heavy selling. Sellers aggressive. Possible end of uptrend. Trend reversal. Like stock is falling from 110 to 100 and it may go to 60, 50, 40 also. Bearish strength. Price down plus low volume. It may again reverse. See, mild profit booking maybe. Lack of broad market participation. But it may rise also, but not a strong bearish sign. So this is all tools on volume we have to check with the real stock analysis. Price action is a very crucial method next to volume. Price action is a study of how a stock moves on its own without relying heavily on technical indicators. We don't need to follow, check MACD, RSA, DMA, SMA, no, nothing. We have to see the price action only. Think of it like reading the market's mind. The price tells you where buyers and sellers are active. The key idea, you don't rely on lagging indicators like MACD, RSA, DMA, SMA. It's all complicated. For a intermediate and basic investor and trader, only you can follow price action. Of course, there are people who are following these indicators. That is the best way of statistical representation. See the chart of Apollo Microsystem. In 2023, it was putting at rupees almost 25 to 30. And then candles are always forming green, 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 green till 2024. And then price consolidation, horizontal support zone is there from 2023 to 2025, mid of 2025. See the price support level, horizontal support zone. That means too less sellers, too much buyers. You see the green candles, more green candles, stronger green candles. See this breakout candle of green. It is breaking the price above the ceiling of 161 and it's moving up. Again, another breakout candle, you see. So the candles will reveal, even if you see the breakout candle volume, the candle volume will reveal like bullish strength is there or bearish strength is there. Volume bar combined with price action will reveal where the stock is heading to. You see trend support zone. Like trend is likely to go up or go down. It will be revealed. See, for last almost 2 years, 2.5 years, the stock is on upward journey, not downward journey. So we have to combine this. Why this Apollo Microsystem is so great about forming continuous upward movement that we will see now fundamentally. Is this stock putting at a good great P ratio? No, P ratio is 156. It's way beyond. Okay. Here in low, high, 355 is very high and 880 is low. Okay. Market cap 11,000 crore almost. Okay. Book value is only 20 crores. Price is 300 crores. So book value is like price to book is almost 15 times. So this is not good sign fundamentally. Anyway, we will see. ROE 10.2%. Okay, not bad. Promoter holding is like 50% only. Number of equity shares 33.4 crores. Okay. What is so beautiful about this stock so that it has been on upward journey fundamentally that we will see. Technically, of course, it is proven. It is last 2.5 3 years. It is on upward journey. Fundamentally, there is nothing so beautiful. See, ROE is not more than 8%. Okay, no problem. Last 3% is also ROE 8% only. Okay. What is so crucial about this? See, this stock is in defense sector. So defense stock rally. Okay. This will continue the rally or not, we don't know. Maybe it may continue, maybe it may not. Okay. What about future growth potentials? We will see CWP. Capital work in progress is 58 crores only. What is this 58 crores is being used? That we have to see it in the annual reports, in the documents. Okay. Financial year 2025. We have to open. Okay. This is Apollo Microsystems. We will see CWIP. Okay. See, they are putting a company has recorded CWIP of like 58 crores. That is what I mean, 5,873 lakhs. And that is almost divided by 100. 58 crores, correct. What is mentioned here in screener is accurate. Okay. Okay. $58 crore is matching here. Okay. Annual report. Okay. What they're doing with this money, various testing tools and instruments, expansion of manufacturing facilities, civil works, management, everything is given in the annual report clearly. So one has to cross-check this, whether it is authentic or not. Okay, whether this will help in sales growth, that we have to extrapolate. Profit and loss, we will see. Sales in 2014, it is 70 crores. And now it is 562 crores. So almost they have grown 9 times, 900% or 800%. Okay, profit, how much they made? So profit growth is also from 5 crore to 57 crore. See, the real crux is here. 10 years, they have grown 20% sales growth, profit growth 23%. And ROE is not so good. Okay. So we can give a weightage like 50-50. Technically, it is so good, great. And fundamentally, it's so not bad. It's okay. Not bad. Not bad because it is given growth like 10, almost 20% every year annual growth, compounded annual growth, and profit also 23% and plus. But stock price last 5 years, it has grown 95%. Every year it has grown 95%. Like 33 years, 145%. 1 year, it is 215%. That's why the chart is showing so beautiful. But ROE is less. It should be like 20% above. Okay, it's okay. Some stocks we can give weightage, we can link it with capital work in progress, management integrity, promoters holdings. Like, for example, market cap is only 10,000 crores and the promoters holding, it is from 59% to, okay, 50% is okay. It is reducing, but it's okay. The public is almost same from 2022 to, we will see it for last almost 7 years. Promoters 63% in 2018, and they are gradually reducing. It's okay, not a bad sign, because they are still holding 50. If they are reducing 40, 30, 20, then it's a red flag. We have to avoid such stocks. Public 24% in 2018, and now it is 41% almost. FII, okay, increasing. DAI reducing. FII means who are FII? They are real or authentic or fake people that we have to see. Next Pact Limited, Maybank Securities, National Westminster, Jupiter India Fund. Okay, fine. We can cross-check whether this is all reputed or not fundamentally. Like Motilal Oswal, HDFC Life, HDFC Small Cap Fund, Nippon Fund, or even Miri Asset Fund. If they are all invested, so we can understand that they are all investing after doing their due diligence of studies. Not only technically or not only fundamentally, they are doing every check, promoter, business-wise, everything. So this is about Apollo Microsystems. The chart is saying continuously upward trend because of defense sectors participation, and volume is increasing, decreasing, increasing, continuously increasing, because defense is going to be a futuristic sector in India. This is another chart. SJS Enterprises Limited. And so you see the volume was shrinking when price is going down. See here, price is going down and volume is going down. Price is going up, volume is going up. We need to see only support, resistance, breakouts to determine entry and exit points of the stock. And we have to combine fundamental analysis. We have to check annual reports. If we have time and patience, we have to read them, and then we have to move on. Okay. Now, supports and resistance, this is all general price action theories. I will not go in detail and discuss. See, support, resistance, trend lines, candlestick, chart patterns, breakouts, pullbacks, volume analysis. Everything is seen in the same chart, what we have discussed so far. So any doubts? We have discussed Indian market landscape, 80-20 formula, fundamental analysis, technical analysis, types of charts, volume analysis, price action. Any questions? Yeah, if you found difference between technical and fundamental, it will reflect in PE. Yes, PE is more of valuation metric. For Apollo Micro, price is increasing, but earning is not the trade. Correct. Because of that, what happens? It is not reflecting because only buyers are there. Earning is not catching. Earning should catch. Earning should be parallelly traveling along with the price. How to draw parabolic, that I will ask Senthil to, because I'm not a hardcore technical analyst. I've used only for resistance and support, breakouts to check it, because only this is, I'm more of business analysis and fundamental analysis. Okay, fine. We will go to next slides. See, portfolio construction, we are almost coming into the end of the session now. We have to have 20-25 quality stocks, 2-3 mutual funds, one or two ETF, bond, allocate like 5 to 10% maximum in each stock, not like 100% we put in one stock. Rebalance annually. We have to balance the stock annually. It's not that if we are not balancing or trimming, buying more or selling less, or selling more or buying less. If we are not doing that, then it shows that we are not balancing the portfolio. So we have to have like 20-25 quality stocks. We may have 100 stocks in portfolio, but concentration should be or the real fund managers are right, because their performance is right or our performance is right. Why some mutual funds are performing 20%, 25%, 30%, and whereas ours not performing, or if we are performing 30% above, so that we can understand. Because mutual funds operated by fund managers, so they are very, very particular about each and every business sector, stocks, so that they know much better than us. So we have to benchmark. ETF like gold, silver, we can have, the bonds if we can have, or it's our choice. So mindset, patience is important. Focus on business, not stock price. So we need to avoid the noise, follow data. There may be negative news about a stock, we should ignore. There may be too much positive news, we may have to ignore. Sometimes we need to read annual reports, attend AGMs, like online meetings also. Tools and resources, Screener, Trendline, investing.com, books like The Intelligent Investor, and there are so many books. YouTube podcast, stock market blogs. So we have seen so far backtesting of HDFC Bank 30 years, portfolio construction, mindset, habit, tools, resources, like upcoming books, like I'm going to write second book also. And first book, around 400 downloads were there in Amazon Kindle. Second book, I'm going to release as soon as possible. Start with learning, not earning. Build a watch list of great Indian companies. Blend fundamentals with technical entry points. Financial freedom is a process, not an event. The stock market is a device to transfer money from the impatient to the patient. This is Warren Buffett. So any questions so far?
Satish, thank you. How do we compare the Indian stocks with the UAE or Middle East stocks?
Actually, UAE stocks, we are not supposed to, discuss much. I mean, because of, I don't know, the restrictions, or there are so much restrictions are there. We are not able to discuss about much. But Indian stocks, yes, it's growing economy and fast growing, and US stocks also. We can have almost, for example, India, we can invest, and we can invest in some global mutual funds like China, Japan, or even US. And there are so many who are invested in direct equity also in US. That depends on the exposure, because that is very volatile market, but still good. Growth is good in US also. And UAE, I'm not much aware, because in UAE, I tried, but there are people making good money. But long-term investing is always good rather than short-term trading. So one question is, what about contingent liabilities? What weightage you give? Contingent liabilities like future liability, future, something expected. It may come or like that. It's not, we don't have to give too much weightage for contingent liabilities. Debt to equity ratio is important on debt metrics. It should be always less than 1.
No, I think he means like any emergency.
Yeah, contingent liabilities are like expected liability in the near future. But it's not so critical. It's not so important to follow. Unless, for example, if we have to give 1 mark for 100 marks. If debt to equity we are seeing it's less than 1, and P ratio 20, sales growth 10%, 25%, profit growth 25%, and reputed brand, futuristic sector, we can ignore contingent liabilities. But if
I
the
think
other metrics are very bad, and then we can look at contingent liabilities and we can give weightage like 10% or 20%, or even 20 mark also out of 100. It depends.
I think his question is overall portfolio, personal portfolio, like for emergencies. How much you percentage of portfolio you have?
No, no,
Not
this
on the
is
stock price.
Satish. Anyhow, can you be more
No,
specific on your question?
fine. Yeah, no. You answered my question. No, I was asking about that contingent liability only. It's fine. Yeah.
Yeah, it is for, if it is meant for stocks only. It is not so critical, but when everything is good in a business, contingent liabilities is not so critical to check. But when everything is failing, key parameters like P ratio, price to book ratio, or even ROE is bad, ROC is bad, and everything is disaster, and we have to pay attention to contingent liabilities. What is happening in the company? Are they going to incur suddenly some liabilities surprised way? So we have to check. Otherwise, we can ignore. And contingent liabilities for companies like Infosys or debt-free companies like Tata Consultancy, they will all be negligible, and we can rely. Okay, I think we can finish the session. So this is about next session, like session 4, if we are conducting, it will be like this learning pyramid. More discussions, more demonstrations. So the percentage increases like 5%, 10% only on reading, 20% on audio visual, 30% on demonstration, 50% on discussion, 75% on practicing while doing, I mean, 90% on while teaching others, or like that. This is the first book we have released, and second book is also coming, volume 2. That's it. So this is the end of the session. So with this, we can end the session now. Okay. You can put your comments in the WhatsApp chat, Financial Group. Okay. Thank you all. Any feedback, any comment, just put it in the stocks group or financial literacy group. Okay. Thank you. Bye.